Kenya walking a tightrope of foreign currency scarcity, a falling local shillings and a dip in the capital market as investors sell down to hold their US dollar in their bank accounts. In the meantime, the new administration of President Ruto has announced a $2 billion Eurobond offer for 2024. Aly-Khan Satchu is the CEO at Rich Frontiers Management in Nairobi. He joins us now for a discussion. Good evening to you, sir. Thank you so much for joining us. This $2 billion Eurobond play for 2024, what do you make of the optics from Mr. Ruto?
Well, it's highly problematical because it's essentially dead in the water as the markets currently stand. The Eurobond, which is maturing in 2024, is trading at a yield of 20%, which is about 1,500 basis points above the equivalent treasury, whereas 1,000 basis points is considered distress. So you simply could not sell a 2 billion euro bond into that market environment. So the question is, what is the plan in order to deal with this current Eurobond, which is maturing in 2024? Are they proposing a bullet repayment? Are they proposing to roll some of it over? Because the current scenario, it's a zombie market situation, and there's just no way Kenya can sell. I mean, this problem is not unique to Kenya. There's no sub-Saharan African sovereign issuer that's been able to sell any Eurobonds for the last 12 months. So we've got dysfunctional markets right now. It's problematical for me that so many policymakers simply are unable to address the situation or understand the current scenario that we're facing. It's just very unusual, very difficult, and wishing it better is just simply not working at the moment.
With rate hikes, in the United States, Europe, Bank of England, that's also going to make, if they were able to get that in the market, that's still going to make Eurobonds expensive, yes?
Yes, a lot of the African issuers, we had this period of financial repression from 2008 for a considerable period. And it increased liquidity into the frontier markets. We saw Eurobonds being sold by sovereigns in Africa with a 5 handle, with a 6% handle. But these were halcyon days. They weren't going to last. Our policymakers, in the most part, thought, it was a forever trade. It wasn't. It was a brief interregnum, and that interregnum has come to an end. And we find most of our countries overborrowed, malinvested in terms of the investments they made with the money that they got. And therefore, the debt load is too high. The economies aren't growing fast enough since COVID. In most cases, they're going to have to go through some kind of restructuring exercise, like Ghana and Zambia are trying to do. And really, we've got to face that reality. Here in Kenya, look, if there was a plan, I think they could get through this without a restructuring. But so far, I haven't seen a plan on the table.
Wow, this is very interesting stuff. Okay, rich Kenyans, I assume you're one of them, piling $1 trillion shillings into US bank accounts. What's driving it and why?
So it's not, I think that article is misrepresented slightly. Most of that money is being held in dollars in the Kenyan banking system. There is this liquidity that's there in the system. Of course, these investors would hope we're not going to see what happened in Argentina, where the government has been compelling the conversion of dollar deposits. So we hope that's not going to happen. But I think what these folks are saying is the current exchange rate is not an equitable one. You can't convert large volumes of money at those rates. And I think these rich Kenyans are just waiting for a more fair and equitable exchange rate, which is probably around 150.
Oh, wow.
We're currently around 135.
Wow. So that means further depreciation then. What's the fate of the shilling? Further depreciation?
So the state of the shilling, historically one of the more stable currencies on the continent, but it's been under tremendous pressure and then throttled back supply of hard currency. So you've got this illiquid market now. The currency is currently at 135. I think fair value is 150 to 160. But the risk is that under pressure that they start printing shillings. And then, of course, all bets are off and we could be looking at 175, 180.
Wow. That's big time. I want to ask you about the first quarter earnings season on the Nairobi exchange. How's that shaping up? Who are the leaders in terms of results and so on and so forth?
So the big companies at the Nairobi Securities Exchange are obviously Safaricom, the telecom company, East African Breweries, the beer company and drinks company, and the banks. And these are the big liquid companies. Now, Safaricom obviously has had a very tough time. It's lost about 55% from its all-time highs. It's been under pressure. There's been a lot of negative sentiment towards it, in part because I think the CEO has been unable to show leadership and to tell a story which has got investors excited. Plus, it's heavily held by foreign investors, and foreign investors, once they see an FX liquidity trap, are just prepared to sell at any cost because their credit department's calling them up saying, "We see you can't convert more than $10,000 a day. You've just got to get out." That's the way it works, and that's probably put additional pressure on Safaricom. East African Breweries, they did a tender offer, supported the share price. Diageo bought more shares, lifted that up. It'll be interesting to see whether it can hold this current value once that tender offer is worked off. The banking shares, which are the favorite of many, have the following problem in the sense that they are holding outsized amounts of government securities, and the secondary market in government securities no longer exists. So, the bid-offer spread is 400 basis points for some of these bonds. You can't liquidate these portfolios. So a lot of these and they've also bought a lot of the Eurobonds, the hard currency bonds that Kenya has got out there. If you mark these banks to market, I would argue that most of them are insolvent. At the moment, everyone is looking through that, saying, okay, Kenya's not going to default, it's fine. These banks will get their money back. But, really, if you ran a proper mark to market through their books, you're going to get some interesting results.
Wow, it's always such a pleasure talking to you about this stuff because you break it down so well. We're almost out of time. If you combine everything we've talked about, if in one word on the Kenyan economy outlook, bullish, bearish, or in between?
So let me give you a quick bullish turn. Kenya has a lot of support in a geo-economic perspective. It's rowing against the African tide. It's the Europeans, the US are heavily supportive of this current administration. And I think this current administration has just got to get its ask right. They need about $4 billion, go and ask for it. And if they do those things, we should see the economy turn around.
Great stuff. Aly-Khan Satchu, CEO, Rich Frontiers Management. Thank you so much for giving us the lay of the land in Kenya. Appreciate your time.